Welcome. I'm Kara Erickson, and on this channel, we help everyday people navigate one of the biggest financial decisions of their lives, buying a home. This question is the most searched real estate question on the internet right now. Is it a good time to buy a house? And I'm going to give you an honest, data-backed answer, not the hype you see everywhere else. I'll cover where mortgage rates actually stand, what inventory looks like, whether prices are going up or down, and the personal checklist you need before making any move. By the end of this video, you'll know exactly where you stand. Oh, and hit that subscribe button if you want more no-fluff home buying content. Let's get into it. Let's start with the big picture. As of mid-2026, mortgage rates have been doing something we haven't seen in a while. Slowly, steadily coming down after years of being painfully high. For context, rates hit multi-decade highs a couple of years ago. That froze a lot of buyers out of the market. But here's what's interesting. Those buyers are still out there. They've been waiting, so when rates drop even slightly, demand surges fast. Housing inventory, meaning the number of homes for sale, has been improving, but we're still below historical norms in most markets. That means there's more competition for every listing that hits the market. Home prices in most regions, they have not crashed the way some predicted. They have softened slightly in 2023 and 2024 in certain overheated markets, but the majority of the country has seen prices hold steady or even continue rising. So what does all of this mean? The national picture is rates are better than a year ago, inventory is tight, and prices are stable to rising. But that's not a buyer's market. It's also not the nightmare of peak rates either. Now, here's where most YouTube videos stop. They give you the market data and leave you hanging. But the market is only half the equation. The bigger question is, are you ready to buy? Let me walk you through the checklist I give every buyer I work with. First, credit score. For a conventional loan, you ideally want a 620 or higher. That 740 plus gets you the best rates. Pull your free credit report at annualcreditreport.com today. If your score needs work, I have a video on how to improve it in 90 days. Link in the description. Second, down payment savings. You do not need 20% down. There are programs that allow 3%, 3.5% like FHA, and even 0% down for veterans and certain rural buyers. But understand, the less you put down, the higher your monthly payment, and you'll pay private mortgage insurance or PMI if you're below 20%. Third is stable income. Lenders want to see at least 2 years of steady employment. If you just started a new job or are self-employed, it's not impossible, but it requires more documentation. Fourth is your debt to income ratio. This is your total monthly debts divided by your gross monthly income. Lenders typically want this below 43%. So if you make $6,000 a month, your total debt payments, including your new mortgage, should be under about $2,580. Fifth is an emergency fund. Don't drain every dollar into your down payment. Homeownership comes with unexpected costs. A water heater, an AC unit, roof repair. You want 3 to 6 months of expenses accessible after closing. If you can check all 5 of these boxes, the market timing becomes much less important. Ready buyers make smart buys at any point in the cycle. Let's talk about the rent versus buy debate, because this is another huge search topic. I hear people say renting is throwing money away, and I hear others say it's smarter to rent right now, but both can be true depending on your situation. Here's the honest math. Let's say you're renting an apartment for $2,200 a month. Over 5 years, that's $132,000 gone. No equity, no asset, no tax deduction in most cases. Now, let's say you buy a $350,000 house with 5% down. Your principal and interest payment at current rates is around $1,900. At taxes, insurance, and PMI, you're maybe at $2,500 to $2,700 total. Yes, that's more per month, but you're building equity on every single payment. And historically, homes appreciate between 3 to 5% per year. On a $350,000 home, that's $10,000 to $17,000 in annual appreciation on top of your equity paydown. The break-even point when buying beats renting financially is typically 3 to 5 years in most markets. So ask yourself, are you planning to stay somewhere for at least 3 years? If yes, buying almost always financially wins. Red flag number 1, buying at the absolute top of your budget. Just because a lender approves you for $450,000 doesn't mean you should buy at $450,000. Leave breathing room for rate resets, job changes, or life events. Red flag number 2, waiving inspections in a hot market. I've seen buyers skip inspections to win bidding wars and end up with $40,000 in hidden repairs. Never waive an inspection if you can help it. Red flag number 3, buying in a market you don't understand. If you're relocating, do your homework. Some markets have unique flood zone risks, HOA restrictions, or price corrections happening locally, even when national trends look good. So, is now a good time to buy a house? Here's my honest take. For buyers who are personally ready, Solid credit, stable income, down payment saved. Yes, today's market can absolutely work in your favor. Rates have room to improve further, but waiting for the perfect moment often means you miss out. For buyers who aren't quite ready yet, use this time wisely. Build your credit, save aggressively, get pre-approved so you know your number. The best buyers are prepared buyers. If this video helped you, please like it. It tells YouTube this content is worth sharing, and it helps me reach more people like you. Subscribe for weekly home buying content and comment below. What's your biggest obstacle to buying a home right now? I read every comment. See you in the next one.